Hello and welcome to MF Corner on CNBC-TV18. I'm Vinnii Motiwala in the Mumbai studio. And this is at a time when markets are in a tizzy. Earnings growth has seen a slowdown. Is it time that one should actually start investing as an investor and looking at international mutual funds? How important is it to diversify into international mutual funds, and what is the risk that you face, especially in terms of rupee depreciation? Is that a concern comes in? That's what we'll be discussing today, and that's what we'll be talking about, investing in international mutual funds for an investor. What are the pros and cons of that, and how should they going forward? They should take this forward in terms of decision. Now, obviously, for that, we have our experts joining in with us. We have Sanchita Mukherji, who's the managing partner at Talk the Walk, joining in with us right now. And we will be shortly joined by Dhirendra Kumar, CEO at Value Research as well. Sanchita, good afternoon. Thank you so much for joining in with us. And firstly, happy festivities. Tomorrow is Christmas, so surely excited about that. But international market, how is that? What is it that you're supposed to be looking at in terms of the mutual fund side? Is it the right time to start looking at international mutual funds right now?
Thank you so much for having me in your show. It's always a pleasure. When we are talking about international mutual funds, let's understand a lot of investors are curious about different economies of the world and different markets of the world, say US markets, European markets, Chinese markets, Taiwan, Hong Kong. There are mutual funds, there are ETFs. So how does one really go about it? When one discusses international mutual funds, it's very, very important to understand that they also come with a lot of volatility. And the risk parameters, the benchmarking over there is very, very different. So it's important to take the right kind of advice from a registered investment advisor. A lot of investors also feel that geographical diversification to a little bit of an extent in their own individual holdings makes a lot of sense. So they do like to understand about different geographies and what it entails. However, having said that, a lot of international funds are also linked to geopolitical tensions. They will also be at the vagaries of monetary policies outside of India. But having said that, on the plus sides, a lot of sectors which are not well represented in the Indian equity market. Say, for example, if an investor wants to invest into clean energy, renewables, advancements in technology, artificial intelligence, EVs, these are some of the thematic and sectoral funds which international funds through the mutual fund route also offer. So this is quite varied. And right now, after the recent budget, the tax treatment is also at par with domestic equity mutual funds. Hence, a lot of investors are actually curious, but it's important for them to understand that these are volatile. The risk parameters are different. One needs to have a longer horizon of 5-year plus, and one needs to take the taxation advice from a tax expert.
Absolutely. That's very, very important, right? Long-term horizon is what we're watching out for as well. Sanchita, if you could help us just understand, how should one choose the right international fund? Is there a key parameter that one should be watching out for?
Well, it'll, again, as I usually talk about investment thesis or a mantra for me, it's like no one size fits all, right? So you'd have to understand how your individual funds, what are the exposures in Indian equity, and how you've gone about with investing, say, in large cap, mid cap, small cap, thematic funds, fund of funds, hybrids, and all of that. That will define also your objectives and the parameters that you have for your own self when you're investing. Having said that, it's important to know investing into international equity mutual funds is like a double-edged sword. Whilst I mentioned that, one can, based on your own understanding of geographies, your own understanding of themes or the mega trends, be it advancements in healthcare or artificial intelligence, semiconductor manufacturing, technology prowess, all of that, which are the themes you would like to understand or take an exposure in as an investor? Right kind of advice is often sought in this kind of a thing because it's typically meant for savvier investors, not for first-time investors, definitely not for investors who are looking to park their money in the shorter horizon. Definitely an absolute no-no for them. So one has to understand and have a knowledge of international markets because on one hand, you might greatly benefit out of geographical diversification, out of investing into mega trends which are not well represented in the Indian equity markets. But on the drawback, one might also land up investing in economies which do not have a very rewarding experience. For example, China, I mean, if one were to look at Chinese economy, one were to look at the deflation situation in Japan, these have not really made money for retail investors for long periods of time. So one has to be very, very cognizant of international investing as a double-edged sword.
Absolutely, Sanchita, well put, right? Double-edged sword is what one is watching out for there. But we also have Dhirendra Kumar of Value Research joining in with us as well. Dhirendra, good afternoon. Thank you so much for joining in with us. Well, obviously, we just started talking about, the importance of international mutual fund and how one should be going about this process. Could you explain us and help us understand what is the risk that is there, and what is it that, what kind of investors can actually look at this international mutual fund?
I think every investor should consider investing in international fund, simply because, the reason why you invest in a mutual fund is to gain diversification with convenience. And the global funds, or the international funds, or the funds which invest abroad, are the ones, they are the simplest route. If you have any other way, you have 50 other things. You have to worry about taxation. You have to go and look for a broker. You have to go and convert your rupee into dollar to invest. So this is the most convenient. You invest it just like any ordinary mutual fund. Everybody should invest simply because we have our jobs here. Most of our money is invested in domestic markets. We have our houses here. And if all of it is going out of favor, there will be a part of your money which will not be exposed to that. That is what diversification is for. Then comes, and then third reason why, there are companies and there are countries where something happens which never happens in India. Why all the technology innovation happened in the US, or why China over the last 15, 20 years became the global manufacturing hub. So there are competitive advantages, in different geography, different economies, and there are a lot of there is a lot of history to it. There is a lot of ecosystem to it, and to benefit from that, and someone could be opportunistic about them. To benefit from that, one should invest in international fund, and it should be part of it is a relatively new segment of the market, also not very accessible, because what has happened is that if investors want to invest in such funds today, most fund companies have hit their ceiling. RBI has a ceiling of $7 billion for the whole mutual fund industry. So no mutual fund is permitted to invest in international funds anymore. International funds are available in two formats. Those fund managers can invest and build a portfolio of stocks, or they can invest in another fund, which and run that fund here. And there could be, and the third route that is available is the ETFs. You have many ETFs in which domestic investors are investing, or ETF mounted on an index, international index, and that segment has become very dangerous. Most international funds, index funds, ETFs, are trading at a premium of 10 to 30%. That is downright dangerous. The day RBI permits that, you will face that loss. The premium of 10 to 30% is just not justified for any of the ETFs trading in the market today. So investors need to be very careful. Not to say that, whenever it is possible, there are still about 15, 20 open-end funds where investors can invest. Investors should consider them. The best vehicle for investors would have been, a domestic fund which also invests abroad. And there are many such great stories in the market, options. But they have also stopped investing abroad because of the ceiling.
Absolutely. Sanchita, I want to take it to you in terms of the key risk, that we face in terms of the international market, because we see so much volatility that comes out, right? Given geopolitical tensions, you don't know what is going to be happening tomorrow, rate fluctuations that we see coming in. So, or what are the other risks that an investor, if you're investing in international mutual fund, that you have to be aware about?
100%. You have to be very, very aware and very cognizant, as rightfully pointed out by Mr. Dhirendra as well. There's this whole talk and a very large debate on these RBI ceiling, $7 billion as an industry, as a mutual fund industry, and $1 billion per fund house, and a separate corpus of $1 billion for ETFs. Now, what he mentioned, a lot of people question why would RBI have these kind of ceilings? Because is it something to do with our forex reserves and all of that? I would say a lot of thought and a lot of meaning and impact goes in our with our regulators' view, because they really would primarily like to protect the retail investors. So our regulator is very strong in that aspect. Their worry is the kind of volatility and the risks involved in international markets, and they're very, very cognizant of that fact that if you suddenly allow these ceilings to go up dramatically, it might impact a lot of retail investors, because a lot of times people invest without really understanding what the underlying is. For example, he rightfully mentioned the number of ETFs and their valuations. In today's date, we talk about Indian valuation, that possibly it's on the higher side and all of that, and the apprehension. But think about it, when you're investing into international mutual funds, a lot of them are benchmarked to NASDAQ, Dow Jones, S&P 500, Russell 1000, Russell 2000, Russell 3000, Hong Kong ETF. I mean, the list is endless. Are we actually aware as investors on what we are investing into and what are the valuations in current date? So it's very, very important, because only if you understand what you're investing into, what the underlying is, how they have behaved traditionally over 10 years, 5 years, 15 years, is when you can take a meaningful exposure. Hence, the right advice to a registered investment advisor is very, very critical.
Okay. On that note, let's just take a very short break and a breather. On the other side, we'll continue this discussion with Dhirendra as well as Sanchita on investing in international mutual funds. So don't go anywhere. Welcome back to Mutual Fund Corner. Still have with us Dhirendra Kumar of Value Research as well as Sanchita Mukherji of Talk the Walk on investing in international mutual funds. Dhirendra, let's talk about this. The way to invest in mutual funds, would you say international mutual funds and investing through mutual funds abroad is the best way to go, or is there another strategy that one could also follow?
Either is fine. You have actively managed fund and there are passive funds. And, there are domestic fund managers who are investing in a bunch of, such stocks, or they're constructing the portfolio and investing directly. It doesn't matter. Both are well regulated. Investing through mutual fund is, the reason why you invest in a mutual fund is that you don't have to be an expert and you don't really have to anticipate this. And I would say that everybody should, steadily increase their exposure to international funds or these funds. And it can, I would, given the opportunity, I don't think what is going on right now, that RBI has its own compulsion. It has to worry about the economy. It has to worry about the foreign exchange, reserves that we have. And it thinks that we will be relatively unstable if we, or there will be massive exodus from domestic markets to those markets. I think, we should gradually permit it. And that is RBI's, RBI has to really grapple with this. In Indian market is fairly attractive. Most investors still have most of their money invested domestically, and a certain percentage of his money, if is and today I have even today, I'm permitted to invest up to $200,000 every year directly.
Okay.
The only reason why I discourage, or I suggest that nobody should invest, because then you have to look for a broker. Then you have to decide where to invest, whether it should be a fund and what is the regulatory jurisdiction. Something goes wrong, your broker goes bankrupt. What will be your recourse? I think for those reasons, domestic funds actually become very easy, and then you have to worry about transferring the money from your bank account, converting it into dollars, and funding that broker's account, where the money will lie, and you will take a decision whether to invest in a mutual fund, ETF, or a bunch of foreign stocks. I think that is all cumbersome. These mutual funds, you can set up your SIP, 5,000, 10,000 rupee, do it for a period of time. And I think what RBI is doing is something where I just find lack of confidence in I don't think there is any such worry, but I really can't question their wisdom. There could be 50 other things which will be driving their decision. But
Absolutely.
I think as and when permitted, every investor should gradually increase their exposure without worrying too much about anything.
Okay, absolutely. That's a word coming in from Dhirendra. But Sanchita, 2025, that's upon us, just around the corner. Importance in today's time of diversifying in the global markets. What is it that is so important?
Oh, absolutely. First of all, it gives you a very good leeway and an excellent roadmap in terms of diversifying geographically, right? So, whereas, one would see the stellar run that the Indian equity markets have had in the last couple of years. And we have entered a phase in which there are questions on the slow earning growth and all of that. So, investors do look at an exposure and a bit of a diversification into international funds, which is the mutual fund route, like you rightly mentioned, is a very convenient, simplified process and very, very transparent and a very liquid way to go about with geographical diversification needs. That's point number one. Point number two is the currency depreciation. What was just mentioned right now, a lot of middle class people who have traditionally now for the last 10 years, there's been an entire income explosion in the middle class. A lot of aspirational people like to send their children abroad to study and all of that. The rupee depreciation of 3% every year kind of hits, right? If you have these kind of aspirations, because let's understand, in an international mutual fund, when you invest, you are actually hedged against the currency devaluation of your own country, right? Because if you're investing when the rupee was possibly at an 85, and then there is a currency devaluation, and when you're exiting that fund, and the rupee is at an 86, that's a devaluation, you actually stand to benefit. So it is a hedge against that, right? So geographical diversification, it's a currency hedge. Plus, you get to understand and have an exposure into advancements into many other sectors which are not currently well represented into the Indian economy. For example, if there are advancements, semiconductor, chip manufacturing, advancements in technology, advancements in AI, advancements in clean energy, renewables, electric vehicles, you can get an exposure into all of this and more through international mutual funds by investing through the domestic mutual funds route into the international equities.
Dhirendra, your view on importance in 2025 for diversifying one's a portfolio into the global markets through mutual funds?
Yeah, undoubtedly. I would say that, one should have anywhere between 10%, 20%, going up to 50, 60% of one's long-term money. Long-term is the key word because, when you have a way of approaching it, never invest your short-term money in equity in the first place. So even whether it be international market, one should not. Spread your money over time because, it's very difficult to time what will actually be the mechanism when the other markets are expensive, cheap. We witnessed the US market. We saw the bottom at a time when everybody was fearful. And since then, the market has gone up. In fact, some segments of these international markets or some of these funds, they have been the primary driver of many of our diversified equity funds because those markets have done extremely well. And it is very difficult to time a segment of the market or a sector of the market. Likewise, it is very difficult, or I would not say difficult, it is impossible to time your entry into a geography or a certain market which is cheap or expensive and be out of it and be in it. So I would say that just be methodical about it, put your long-term money, make sure that, you have a defined allocation. And if I'm talking of, 25%, 30%, 40%, think of it. But right now, I don't think domestic investors have avenues to invest in a fund, where they can objectively look at an attractive fund or a good fund, which is there in the Indian market, but is not taking money because most good funds, they have stopped their gates. Some of them are still open, and it's just a matter of time that they will also be shut down.
Okay, a quick word in terms of this for both of you all. What would be the allocation that one should have in their portfolio towards international mutual fund in 2025? Just a number. Sanchita, first up.
Well, it would all depend on your own portfolio build-up. I think that is something that an investor can discuss with their advisor. But anything, as a thumb rule, one could look at a 5 to 10%, possibly not more, because like I said, for me, I would view it as a double-edged sword. There are opportunities, definitely, but there are risks associated. So obviously your own learning curve as an investor, the kind of advice you get from your investment advisor is very, very paramount, because thematic funds abroad can move in either which ways. And with Trump coming in 2025, and there's a lot of talk about the impending trade, tariff wars and all of that. Yes, so very long horizon, at least 5 years plus, and possibly 5 to 10% or more.
Sure. And Dhirendra, what would your number be for if you even talk about long term for international mutual fund allocation?
Investing for 10 years and more, I can well go up to 50% of my portfolio.
Oh, wow. Okay. That's a nice number there. Sanchita, just a word in terms of how accessible and liquid are these international mutual funds compared to maybe investing in directly through foreign stocks or bonds? What are we watching out there?
Oh, they are very, very transparent, very liquid, and very accessible. 100%. There, the process of investing is extremely simplified. If one were to look at direct stocks to the liberalized route scheme, there again, like he just mentioned, you'll have to open an account with an international broker. The account opening process is quite cumbersome. The compliance of the LRS reporting is will again be quite tedious. So for a retail investor to get a slice of the international pie in terms of investing through a diversified international equity mutual fund through the domestic mutual fund route is excellent. Right now, the mutual fund industry has close to 70,000 crores in 76 international funds, last I checked. And I think 43 out of that would be open through barring one, would be open through the SIP. Most of them are not taking lump sums, which you just mentioned, because there is a ceiling of $1 billion per asset management company. And one has to be very cognizant, like I said, of the underlying. I mean, are you really playing, or are you investing into the US manufacturing or the technology? Yeah. What are the valuations and all of that?
Okay. Okay, Sanchita as well as Dhiren, thank you so much for joining in with us, because we are absolutely out of time on this edition of MF Corner on CNBC TV18. So thank you so much for that, and thank you so much viewers for tuning in. But up next, closing bell to take you through the last hour of trade.